Hi there. We're here to talk about Connecticut state payroll tax withholding. Connecticut is a really complicated set of tables in order to properly withhold for your employees' wages. So I have gone through all of them and I've programmed them all in the payroll and Google Sheet application that you see on the screen right here. And we're going to go through how that's done, but it is accurate. And also, I've done a complete run through of all the states now for 2023. And I'm just waiting on a few states to publish guidance, as well as the federal government to publish guidance. And then this thing's ready to go. So, done a tremendous amount of work the last few days on this. And so now I'm kind of revisiting states where I wanted to correct some things. And Connecticut was one of them. But I spent the time tonight to go through it all. So let's explain how to do this. First of all, you have to fill out the CT4 to put the withholding letter. Okay, that's this form right here. Get a look, answer the questions. Doesn't really matter about the status so much, other than figuring out which letter you're going to choose. Once you choose that, that's going to have a lot of downstream impacts on how your rate is calculated. All right, so the instructions go like this. They want you to annualize your wages, and then you start to deduct out personal exemptions, and then you're going to figure out additional phase back taxes that might apply. So to make this easier to understand and read, what I've done is I set up a bunch of tables to round annual wages to the thousand and then show whatever the phase back amount is or the exemption amount is. Like there's an add back here that is shown up next to the wage, next to the letter of the designation of the code. So there's, the different letter that the person chose on the W-4. All these tables are connected to the formulas that I'm going to show you in a second. And so the first thing you're going to do is work on the personal exemptions, which are going to be right up here. So it shows you whatever your code is and whatever your annualized salary was, it shows you what kind of exemption you qualify for, because some of them get phased out the more money that you make. So here's how I did all this. Let's see, we have a ton of different formulas, all these ones in light blue, and you have to set up a different preliminary calculation for each one of the filing statuses. So first thing you do here is you're going to annualize your wages. Take the amount of wages for the pay period, multiply it by the number of pay periods. Get this. Then you look up in the table to see what the wages are here. That's what this formula is. It looks up in that table we were just looking at. It rounds the wages to the thousandth, or thousand, I should say, rounds it to the thousand, so that it hits a number on the table and it kicks back whatever the exemption amount is supposed to be, and it changes based on whatever code you chose for the person. Then you get an annualized taxable amount, just this minus this. It's right here. Then you do a preliminary withholding amount. And the preliminary withholding amount is based on this table right here. Whatever code you are, whatever wage bracket you fit into, that's what this formula is right here. It's a nested if formula that puts these wages into the proper bucket right here. You do the same thing for codes A, D, and F. You do the same things for code C. Then you have to do the phase add back equation. That's these tables right here. Some money gets added back in if you go over a wage threshold. Have another table for that. This is the formula that looks into that table and does that for codes A and D, for codes B, and for code C, and for code F. Then you have another recapture. You have another recapture, which is this tax recapture. And if you have a tremendously high wages, you're going to have some more that gets added back in. So this doesn't hit a lot of people, but it's still part of the formula. So there's the this recapture formula right here, phase recapture code A, D, and F right here, recapture code B here, recapture code C here. Then you have a personal exemption factor that you have to figure out. The personal exemption factor is personal tax credit number, similar type table. You're going to reduce the withholding amount by this percentage depending on whatever the wages are. If they're between 12 and 15,000, you get to reduce by 75%, whatever the withholding amount was. That's how that works. So it puts the code here for code C, for code B, for code F, and for code A. It puts the recapture code, and then you do your preliminary tax for each one of those codes. which is you add up the three recapture things and multiply times the PE factor. So you take this PE factor number like 0.9, it's 1 minus whatever the factor was that came out here, 1 minus this number, whichever one it is. 1 minus that gets this factor. You multiply that times the recapture times the phase back plus the income tax withholding the initial income tax withholding. So if you were doing B, you'd have this one, phase out for B, and also recapture for B here. All those three together, multiply it times the PE factor, and then divide by the number of pay periods in the year. That's what these formulas are doing right here. Code B, code C. And then you figure out which code the person actually chose, and you put that tax in the Connecticut state tax withheld column. And that is how you do Connecticut. Looks like this. Looks like this. And there's also paid family leave in Connecticut as well. It's right here. There's a paid family leave percentage as well. But this is how it works. It's extremely cumbersome because you have so many different tables that are structured by the 1,000 that you kind of have to use. I did a little bit of shorthand to condense some of them, but basically they're very, very, very close to on the dollar accurate. And the withholding comes out very, very close to anything you could check on any other website. So Connecticut is done. It has all those tables. That's how it works. The good thing is you just have to have your employee fill out the Connecticut W-4 and put the code in there. And the rest is going to take care of itself because you don't have to choose a filing status, really just the code. So if this person was a code B, for example, okay, at code A, they have $30 of Connecticut state tax. What if they were a code B person? Okay, if they're code B, everything changes. This drops to $11.93 because that's more of a married filing jointly type status that could be. That's why the tax is reduced so significantly. What about if it was a code C? Then it would be only $5.63. Wow. So code C is even more money seems to not be taxable. What about code D? I'd imagine it's going to be more like code A. It is going to be exactly as code. We're just about 33.65 is what it is at code D. And what about code F? $25.10. See, it just takes a second to change. All right, guys. That's Connecticut state tax bill. That was a big one on my list because it's so complicated and there are so many formulas, but we've got it down. We'll see if they update anything for 2023. I don't think they are. I think these rates are going to be good through 2023, but we'll let you know with another video. So Connecticut is done. The rest of these ones we're basically still waiting. We're just waiting. That's all we're doing. And we're going to be about ready. We'll update Washington State with all their sub taxes. They don't have any state withholding, but they got a bunch of other ones. But other than that, this is looking very good. So we're waiting here on December 12th, and hopefully we'll be able to get a publication 15 out there soon so that we can get the entire federal updated and have this thing rolling so you can do payroll for your small business. Go to kenbraverman.com, purchase copies of this, and ask me questions about it. Good luck. Payroll should be easy. We're making it so. We made it so in Connecticut.